And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and happy Friday. It's time for the market forecast. Friday, September the 22nd. My name's John. Thanks for trusting me with your time. And as always, I'm going to try and put some context over these markets this morning. It's going to be a bit of a challenge. I have been unable to connect my charts to the program this morning. So I'm going to do my best to walk our way through what I'm seeing this morning in these markets. And hopefully you're going to be able to see what we're talking about, perhaps on your charts. This morning, 8:45, there's a prelim look at the next PMI numbers, Purchasing Manager Index. Again, that's 8:45 Central this morning, 10 o'clock Central. Chairman Powell speaks. This should be an interesting one. We've got revenues of Intel and Snap have pressured Nasdaq prices a little bit. We've got equities set to open mixed, awaiting Powell's speech. The chip maker and seeing some more disruptions continuing in social media has lost some advertising dollars, largely due to the new privacy restrictions on Apple products. Again, U.S. equity futures set to open mixed. Powell's going to be speaking, expected to outline new restrictions for trading by central bank officers. Washington is, of course, still a mess. And Honeywell and American Express are leading earnings already out this morning. Smaller list of earnings here on Friday. We're going to see a whole boatload of earnings next week. We'll be paying attention to those for sure. VIX down a little bit, 1497. Very low, not a lot of volatility in these markets. Dollar index slightly lower at 93.66, and the 10-year yield continues to creep a little higher and higher, 1.68% last time I checked this morning. Got to say good morning to everybody. Good morning, Brian. First in the room, you win the prize, Spence. Good morning, Daniel, Chris. Have a beautiful day and a great weekend. Yes, that's be great to end the week strong and have a nice restful weekend. Be ready for next week's chapter in this year's book of trading. George, good morning. Felix, good to see you. Ron, Janus, Vince, good morning. Harry, Laura, Ricardo, Andre, George, Alfred, Zoraine, Dr. VJ, good morning. Dead letter opener. France, haven't seen you for a while. France, it's nice to see you. It's good to have you back. Patrick, Frederico, Jerry is awake. Hopefully John is too. Apparently John's computer is not. I'm going to have to restart the other computer here to see if I can make sure I get these charts nice and solid. Apparently the gremlin is back. So good morning, Jimmy, James, Harry, Nelson, Stephen, Ophelia, Slim Jim, good to see you. Robert S. and Rob T. A couple of perhaps new names there. Coop, good morning. Always a pleasure to see everybody, and always good to see new names here. If this is your first trip to the market forecast, I am severely sorry I'm not going to be able to present the charts this morning. Again, I'll do my best to kind of talk our way through what we're looking at here this morning in these charts. And by Monday, I'm sure that I will find and get rid of the little gremlin that seems to be messing with my technology. He's around here somewhere. I don't know, maybe I'll find him later. So let's just kind of take a look here. I got my notes. I'm all prepared, and I'm all dressed up, and I got nowhere to go. All right, crude oil 5-day balance has been created. If you're looking at the daily, you can see, the upside structure is still quite strong. Open interest indicates liquidation off that low that we put in yesterday. We had a late spike the day before. God, I wish I could show you all this. That really brought a nice downside move lower, just to basically trade to the previous day's low and then recover the better part of yesterday's activity. We're still in that range. Balance and breakout rules apply. We get to the extremes of balance, we fade those extremes until there's acceptance outside the balance, and then we go with the breakout of those. Taking a look now at the 30-minute chart. Radio style technical analysis, as that is good. Good morning, Barry, Sviatoslav, and Dead Letter Opener. Hey, good morning, Rick. It's good to see you this morning. You're probably going to see a lot of me. I've had trouble with technology again this morning, and I'm unable to present the chart, so I'm trying to walk my way through them. And as Dead Letter Opener has said, it's kind of radio style technical analysis. I'm onto the 30-minute chart. If you put your volume profiles on there, you get some pretty defined levels of balance. We are currently holding some overnight longs. There's a chance, though slim, that we may open with a bit of a gap, watching those overnight longs up near the upper extreme of the balance area. Looks like an interesting opportunity for us. Again, we lost 30,000 in open interest yesterday. A lot of that, of course, expiration. So, are we going to open with a gap? Maybe, maybe not. If we don't, I'll look for acceptance or rejection at value area high, which is about 82.34-ish. So we've got a gap up near the upper extreme of the balance area. Could be an interesting opportunity for us early this morning. The E-mini S&Ps, hey, we're back to all-time highs. The resilience, it just never ceases to amaze me. The all-time high, which was put in the September contract, was 49.50. We've gotten within about 6 ticks of that pre-open this morning. Doesn't look like we're going to be opening with a gap now. The December all-time high was 45.38.50. Obviously, we've already usurped that in regular trading hours. Looking at the 30-minute chart now, we have a new all-time high that has occurred in the overnight session. We haven't had to say that for quite a while, a couple of months since we've said that. And as we all know, the market does not like to leave new all-time or recent highs in the overnight session. So we've got no overnight inventory. Yesterday we added about 5,500 in open interest, which isn't an incredible number for a new all-time high. However, we did put in what I'm calling a late spike. The base of that late spike, I'm looking at approximately 45.36. So it appears there's a pretty good chance we may open inside or above that late spike, which marks acceptance of higher pricing. Doesn't mean anything necessarily has to happen. It's just saying that spike to the upside in the close yesterday has not had time yet to accept or reject as value or the perception of value. It hasn't had the time to accept that level. So as long as we hold above that level and we can be supported by that level, again, 45.36 approximately, I'm going to be looking to buy weakness in this market. If we can't hold their value high is all the way down at 45 45.30 approximately, and that could lead us back down to a move back down basically to value low, which is 45.20, our weekly kickoff high. Supportive for us yesterday. Very nice opportunity down there yesterday. And then, of course, the late spike today. So, interesting things. The Nasdaq is not performing as well to the upside as the S&Ps. We're a long way from our all-time high. I've got Lacey saying good morning to everybody. She's lost her ball, and I have to go get it for her. But I'm not going to do that until we're done here. So she's gonna complain a little bit. But she is the center of the universe, so we'll just let her complain. 4 days, perhaps, of balance. The market, we've had a pretty big move to the upside. What was I looking at here? Tech stocks taking some pressure, loose balance over 3 days. Volume and open interests pretty healthy. At least we held volume yesterday. We added about 1,400 in open interest. Nothing tremendous. Taking a look at the 30-minute chart, I would kind of wish I could show these, and it just aggravates me. But we're gonna do this like that letter opener said, radio style. Did we put in a late spike to the upside in the Nasdaq? Well, it does appear that we did. I'm calling it a late spike. The settlement price was right at the high from yesterday, 15,478.75. You might want to put that on your charts. We have overnight longs, however. When the overnight market opened, we've been holding longs ever since. The Nasdaq is looking right now like it is going to open below that late spike, which would indicate rejection of higher pricing. So we've got, again, conflicting information in the Nasdaq and the S&Ps, technically speaking. Looks like we're going to open in range and in value in the Nasdaq. So the Nasdaq, again, struggling. No all-time highs, looking to probably open below that late spike. It's kind of like when you're watching two kids and one goes that way and the other one goes that way, and you're doing this trying to keep track on both of them. It's like you got your eyes trying to go in different directions. It just complicates things. So take your time, especially in the Nasdaq, as it is opening in range and in value. The S&P may offer more clear opportunities if you're focusing on both. Value area rejection or acceptance is really kind of where I'm thinking pivotally in the Nasdaq. Let's go into the gold. Pretty decent upside move here right off the open. Well, if you could see my daily chart, if you saw it yesterday, if you're looking at your daily chart, from the lows on the 30th of September, and then taking that trend line that we've had 1, 2, 3, 4, 5, 6 points of contact off the high from June 1st, just going across all those highs, we've broken out of that coiling activity. It happened this morning, right on the open. The opening range has been left at the low of the session. This is a breakout situation. We have also broken out and accepted in probably some pretty decent volume and momentum above our weekly kickoff high, which is 17.99 even, and price currently right back up at that 1807 to 1809 resistance area that we've been watching and we've been testing up through, back, forth. It's been providing some decent opportunities. So this is a wonderful target if you're long the S&Ps. If you're long multiples, I would lighten up on some of them here, because I'm looking at this as a pretty sticky area for us to get through. It's been a hell of a move to the upside. I'm going to be happy with what I've got, especially up against this level. I did not look too much into the 30-minute chart. The market opened. It had overnight longs. This market was primed. There was no overnight inventory change yesterday. That says that the market has used up its ability to facilitate trade in that area. Look for it to move to a different level, and boy, did we get that this morning. The opening range low, I'm going to see if I can get this here, was 1795.10, I believe. And boy, it was a big opening range. It was confident. If you were able to get into that upside move before the opening range had established itself, you were able to limit risk a little bit better, but it just never looked back. It has been just one time framing and bolting up to that 1809, the address of my first apartment, 1809 Lincoln Park West. Rick, I know you are well aware of that apartment. Rick saying regular unleaded gas in Gorda, California, $7.59 a gallon. We've got to do something about this, ladies and gentlemen. What are our policymakers going to do? All right. Vince pointing out gold took out the 200 session daily moving average as well. I'm thinking, don't have that on this chart, but I'm thinking you're thinking the daily chart because it's a pretty substantial breakout here this morning. Vince, tell me you caught it. Make me a happy guy. All right. The euro, we had a head and shoulders. We were showing some acceptance above the weekly kickoff high. And the delta divergence yesterday, we're going to see this on the 30-minute chart, if I could show you, was not supported by open interest. Okay, the downside move yesterday had some delta divergence that might have pointed out longer time frame traders involved. It did not happening. The weekly kickoff high here is kind of maintaining magnetism. It seems to be coiling in and around that area. We've got 3 days of balance. The upper and lower extremes of those balance would really be my focus this morning. Where are we this morning? I mean, we've got perhaps some overnight longs that have already reconciled. We're inside range, kind of testing weekly kickoff level and value area low from yesterday. Is this on my radar real deep today? Probably not, unless we can get to some of the extremes of the 3-day balance. Our current overnight low, and we've got an unfinished gap up above that kind of creates our upper area of balance. God, I am so sorry that I don't have these charts. There's so much to see and talk about. The 10-year, we broke out below the weekly kickoff low yesterday, which was 130 and 930 seconds. We added 13,000 in open interest. We added some volume, so the downside auction does appear to be relatively strong. As if rates continue to creep higher, we can see this market. Obviously, we've been talking about a measured move. If we could see it, that measured move is right down around 129 and 1930 seconds, which would be a pretty decent measured move to this downside. The 30-minute chart. We I believe opened with a gap. We've since closed that gap. If we get back inside value from yesterday, which value low is 130 and 730 seconds, if we get back above there, we could see a value area special situation play all the way back up to 130 at 12 and a half ticks. Not a tremendous move. So I'm kind of watching to see if we reaccept inside the range from yesterday at all. Nat gas, we have. God, I wish you could see this. We've been looking at a head and shoulders to the downside. The head and shoulders is still somewhat intact. On the daily chart, it appears as though the last 4 sessions have created what we might call a bear flag. If we can break out the low end of the channel of this, then we might see our continuation down to the measured move that takes us all the way down to $4.13. So that's a pretty substantial move. Yesterday we lost 8,500 in open interest, and really just kind of hanging around that weekly kickoff low. It wasn't like there was any big move, but apparently we did lose. I'm thinking probably some profit taking from shorts above, but we're still in that channel, that bear flag channel. We've got a gap from the weekend that we're currently inside of. Maybe we're going to close that gap from the weekend gap, which would put us up to $5.40. And that would be an area that would be relatively close to the upper channel of the bear flag that we may be forming, would be an interesting spot. So, again, my apologies. It's Friday. I did find the gremlin. We're going to have a little chat. I'm going to feed him to Lacey, and Monday morning, I'm sure we'll have our charts ready and good to go. I know. No charts, get your crayons. I know. I keep getting attacked by technology and this little guy. Lacey, eat this thing. All right. On that note, with the inability to see, I'm going to say, let's call this a forecast. Let's finish the week strong. Let's make some money and have a good, restful weekend. Do a little research, do a little reading, go have a little fun, be good to yourself, be kind to yourself, be kind to others. Let's take our deep breath. It's already been a trying morning. Not trading wise, but as far as the forecast and technology is concerned, and we're going to eat that gremlin, so we'll get that taken care of. Enjoy the weekend. Yes, Patrick. Get out there, profit. Have a great trading day. I'll see you in the pit in just a few minutes. Make some money. Go play golf. That's what we're going to do today. All of you, looking forward to your success. Trade well today. Again, I'll see you in the pit in a few